A very, very warm welcome to this beautiful Friday. It is the 21st of November, guys. We are steamrolling through the month. As I always say to you guys, we're going to be hitting Christmas very soon. And we want to wish everybody well. Whilst, it's still young days, but in advance, we're saying we're going to get there very soon and very quickly. It's the opening bell, and we have to mention, just before we do get started, remember this video is opinion. Please do not construe this as advice in any way. I'm ready to get going. I'm seeing there's a few guys online there as well. Twista, I see you, Jules. Good morning to you. Quick reminder, do not forget Crypto Decrypted today. That will be at 2 o'clock via YouTube. All right, that's Crypto Decrypted. So let's get moving. Let's see what's happening here on the markets as we do the market wrap up for this Friday. Interestingly enough, let's mention a couple of assets here first. Silver fell below the $50 a barrel. Second day that it's dropped. It's dropping at this moment in time. Reason for that is markets are thinking that the Fed won't cut those interest rates in December. And the latest job data was mixed. We had strong hiring but higher unemployment. And the result of this is that silver is set to lose over about 1% this week. So check out the technical chart on that one. You'll see it. It is actually pushing towards the downside already. If I can just go to that chart, look at that. It's actually pushing down significantly now. Look at that. It's at the 49.30. However, Ash is still of the view that there could be a bit of a support that we find here, a bit of a correction, because the lower low is not as strong as what one would think. It is the thrust and the impulse to the downside based on what's happening in the US that's created that move, but it does not mean it's going to be sustained. Remember, price has already pushed up. This is a very, very deep and extended correction. When I say extended, it's got a low, it's got a lower high, and it looks like we could be doing a lower low, but let's wait and see how that goes. Don't forget the Bitcoin price today, guys. We got to move in with that one as well. We had brought this about 2 days ago. We said that we anticipate Bitcoin to go to about $88,178. It has pushed down till there, and it did drop, now, and it's the lowest since April. And this big sell-off came from a global drop in tech stocks, believe it or not, especially the AI-related names, all right? So we have to also mention that ongoing Fed uncertainty and unclear jobs data also contributed to this big sell-off. So Bitcoin is moving more like a tech stock again. The correlation is now 80%. That is between tech stocks and Bitcoin. All right, watch out for that one. The Japanese yen. All right, look at this, guys. We had this one, in the beginning of the week, pushed up beautifully here as anticipated. It's went to our levels. Now, the great thing about this is, guys, is that, we can give and push a lot of fundamentals in place, but we obviously amalgamate that with the technicals as well. So you have a great combination, for your specific portfolio that you are obviously putting together. Now, the yen should be in that because it's really traded very well and very roundly. It did steady near the 157, as you can see here, guys. After weeks of weakness, it's finally steadied. Japan's finance minister hinted at possible intervention, all right? And if the yen moves towards the 160, I think the commitment is going to be there from an intervention perspective. But overall, the yen is still down nearly 2% this week. A huge new government stimulus of 20 trillion yen is raising fiscal concerns, and that's putting pressure on the currency. So with the dollar obviously strengthening here, guys, we're seeing the yen possibly drop back a little bit today. I am seeing a bit of smaller candles here on the technical side. This could lead to a bit of exhaustion, and then we push up again. But we're going to wait and see what happens at the support here. So that's for the guys that want to dig into the actual charting of this specific pair. So watch out for it. All right, the gold price, we can't, omit that in our analysis here today. It did slip to the $4,040 per ounce. The reason for that is the fading expectations of that December rate cut. And so the jobs data, the strong hiring, as mentioned earlier with the silver, the strong hiring, the higher unemployment, and slightly stronger wage growth is giving the gold this type of movement to the downside. Now, markets See that 40% chance of a rate cut next month. It's down from 90% to 40%, and we're going to see where and how that happens. Obviously, midday, we want to see where gold is. We want to see at 3 p.m. where gold is, to try to find some form of direction. At this point, the dollar has not given us any direction. Maybe just something on the dollar itself, guys. It is strong and on track to finish about 1% higher this week. The markets, as mentioned, that the markets will hold those rates steady in December, 40% chance. But also, traders, don't forget, all right, there's a lot of news that gets recycled, all right? It gets recycled, during the week. You're going to find there are highlights that happen on Monday that spills over from Friday, and then there's an extension that happens Wednesday and Thursday. And markets can definitely close off with the exact same sentiment. And then over the weekend, something else happens, and then something else now pushes through as a highlight. So, that's why you got to keep up to date with what is happening. All right. So the jobs data was mixed, but didn't change the outlook. That's the interesting part. It didn't change the outlook. Now, also, guys, we had quite an overwhelming and confusing, NFP result. There's about 4 things there, guys. Missing key data because of that shutdown. There was, from a backward-looking perspective, it was September's results, the market expectations versus the reality. Markets often, price in forward-looking plays, and this has a specific impact, like we saw now. And then, obviously, lastly, the Fed implications. This is a very interesting one because of those rate cuts and the uncertainty of what is happening. So, stronger job growth make it harder then for the Fed to justify cutting those interest rates, guys. So it's very, very important. This does affect currencies, it affects bonds, and it affects a lot of the risk assets. All right, that's a very, very important point that we need to mention in specificity. We're talking about the labor report now. Yeah.